Good morning, Armor Insiders. Welcome to the brand new morning of Risk Monitor Green. Let's get to this quick because we got a lot to cover before the market opens. So I'm going to share with you how I'm building out my portfolios, what's happened to the Risk Monitor. And at the end of the day, this is a virtual hedge fund. So I'm sharing with you the big picture of what I'm doing. You're the portfolio manager. Take this information, figure out how it works for you, and be the smart money. Okay. So let's go over real quick the market itself. The Risk Monitor has turned green. Risk Monitor was red back here at the end of July. Pretty vicious sell-off with a V-shaped bottom. Now, on that V-shaped bottom rally, we did not have confluence from the Risk Monitor, so we could not put any money to work. The equally weighted index gave a risk-on entry point, went to new highs. The Dow Jones gave a risk-on entry point, went to new highs. The NASDAQ 100 did not give the entry point on the 14th of August, nor did the weighted S&P. And so that forced us to sit out the market for a series of days, couple of weeks, few weeks, right? We had to wait. We had to be patient. What the Risk Monitor was saying is this is a dangerous market where there is no confluence. Parts are going up, parts are going down, can't put money to work. And I know that was difficult for some of you for a couple of days when the market went up. But the Risk Monitor proves correct again, which is to be patient. The market will come back to us, and then we can start putting money to work correctly when the reward is worth the risk and the probabilities are at their highest. See, don't forget what the Risk Monitor is. It's simply a gauge of probabilities. We try to get the highest entry point probability when rewards worth risk. So there could be times where it looks like, gee, the probabilities look good, the market's going up. But the reward versus risk based on the algo is saying can't put money to work here. Not worth it, not worth the risk here. And that's a good way to explain what happened in August. Yeah, the market's going to pop up a little bit, but it's not worth the risk and the volatility that's coming. So we've got to be patient and wait. The market will give us a shot. What it's done now is pretty obvious, I think. It's pretty clear. Every index closed the gap from the 14th and reversed higher, proving that institutions are there to support that key location. Okay? So this gray box here, I just put it in there for you. Obviously, the S&P closed the gap. It went below it for a day, happened to be the 50-day moving average, and then reversed back above it. But even look here, equally weighted. The tail yesterday closed the gap from the 14th. The tail on the Dow closed the gap. And so you often hear analysts say gaps get closed. They almost always get closed on big index. Not always, but almost always. The gaps that don't get closed, the few that don't get closed, they occur after the market's been selling off for months and then gaps up off of a bottom of like massive selling for 6 to 9 to 12 months. And then it gaps up and takes off. That's rare, but it happens after a big downtrend. Generally, when you're approaching all-time highs in the market and there's a gap, it's going to close that gap. And that's what the market did. And now we have confluence, okay? So now all the indexes are speaking the same tune. The gap is closed. We've got risk on everywhere. We put capital to work, okay? So what do we do with the portfolios? Just a quick caveat to remember. This is a probability algorithm. If the market reverses down, we have to go back to cash. We want to put all of our capital to work as close to the stop as possible. So when I say all of your capital, all of our capital, whatever we're willing to risk. So as a risk manager of your own assets, you're saying to me, I don't want to buy in September. I don't want to buy in front of the election. All these things are bothering me. I get that. That's fine. You have to make your own risk decision. What I'm doing on my desk is how much money am I willing to put to work right now? That's all the money I'm going to put to work over the next series of days and weeks. Okay. So what I'm saying is if you only are comfortable putting X amount to work now when you're closest to the stop, you don't want to add to the position later when the market's blowing out to all-time new highs and start chasing things and putting more money to work because you didn't put enough money to work now. You don't want to chase further away from the stop. You want to put your capital to work close to the stop, whatever you're comfortable with, and live with those results. Be happy with those results. Whatever you're comfortable with, put to work. Market goes up, you're happy. You manage the success of those positions. Market breaks down, you go back to cash and you wait for another setup. Armor Macro. 2/3 of the capital has already been put to work. I'll finish it off today if we have a strong weekly close. I almost waited till the end of today for the risk monitor to go green, right? I was going to say, well, let's just wait for the weekly bar. But the fact of the matter is it's all there. So the risk monitor is green, and if we get stopped out, so be it. If there's a strong close to the week today, I'll finish off my position, okay? So we use day trading tactics, the carry trade portfolio, to get long the market yesterday, and we have profits already in the portfolio. And now we'll do that again today. We get another setup on the carry portfolio. We'll put the rest of the capital to work. If it rips to the close, we'll have all of our capital to work. I'll be 100% invested, meaning whatever dollars I want invested on this cycle will be long by the end of today, unless the market's cratering. And then what I do next week is I just manage the success and I manage the risk, okay? So let's go over top ideas on the whiteboard that'll be finding their way into portfolios that I'm managing by the end of today. Everybody, I'll see you on the live desk at 9:30. We'll get that started. Armor Insiders, Armor Report subscribers, feel free to reach out. Comment section of this video. I'll answer questions if you got them during the day. Everybody else, if you find it too difficult to make these executions and you want added help, I'm happy to do that for you. Pick up the phone, give me a call, and we'll see if a relationship like that works. All right. Everybody have a wonderful trading session. At the end of the day, be the smart money.